Children are not the only ones excited for Santa to come around this year. Investors also await the Santa Claus rally, the rise in stocks during the final week of December and the first 2 trading days of the new year. But with the stock market having rallied so much this year, will Santa still be able to deliver another rally this Christmas? Here's what investors need to know. It's one of the most wonderful times of the year for investors, because if history holds, stocks are set to rise in the 7 trading days period between Christmas and the New Year. This pattern happens so often that it even has a name, the Santa Claus Rally or the Santa Rally. This year, the Santa Rally starts on December 24th and it ends on January 3rd. But unlike Santa himself, is the Santa Rally real? Well, let's take a look at the previous S&P 500 performance in this time period. Since 1950, the S&P 500 has posted gains 77% of the time during the Santa Rally trading window. But last year, the index fell 0.88%. But before then, it had posted gains for 7 straight years, according to Dow Jones market data. But what about other stock market benchmarks? The Nasdaq Composite declined for the past 3 Santa Rally trading periods, but overall, the trend is still pretty positive. History shows that, on average, the Santa Claus Rally brings a gain of 1.35% for the Dow Jones Industrial Average, 1.29% for the S&P 500, 1.69% for the Nasdaq, and 1.37% for the Russell 2000. As with any seasonal trend, it's really hard to completely explain the logic behind the pattern. But here are some of the causes that experts attribute to the Santa Claus Rally. First of all, people often trade less during the holiday season, which means more volatilities because less trading volume could amplify price moves. Second, some people may execute tax loss harvesting, which involves selling an investment at a loss in order to offset the capital gains taxes incurred that year. Selling at a loss will make stock prices more attractive and affordable for other investors to snatch up. Third, some people may want to invest their well-deserved year-end bonuses in the stock market. And of course, as January approaches, people tend to be a little bit more optimistic about the future and the new year. So, should investors expect the Santa Rally to occur this year? Well, it's really hard to say, but here are a few things investors can look at to gauge the stock market sentiment this holiday season. One is the CPI inflation report released earlier this month, which came in as expected. That was a relief for the stock market that didn't really want any surprise to interrupt the year-end rally. However, the Federal Reserve this week signaled a cautious path for the interest rate cuts in 2025. Investors need to be cautious because we still don't know if that's enough of a problem to derail this year-end rally.